Where we sit on a daily basis with the estate tax, it's a moving target. So we can have the best plan in place, but in a few years it can be turned upside down.
Anne Margaret Hughes knows all too well the impact of a fluctuating federal estate tax, a lesson she learned in 2005 when her grandmother passed away.
The estate tax exemption was extremely low, and because we're close to Charlotte, the value of land here skyrocketed. So we knew we had a family farm that was going to pass from one generation to the other. We did not expect the value to increase so much. And so that year we were hit with a hefty tax bill, the estate tax bill, because we were over the exemption limit. And so it came down to the conversation. I was in high school, my sister was in elementary school, and Mom sat us down at the kitchen table and was like, "This is y'all's future. It's not just my future, it's all of us together. Do you want to continue farming, or do we want to sell the farm to pay for the estate tax?" And our decision was we wanted to keep the farm in the family and keep going.
The family's next decision: how to pay for the tax.
And if we would have sold part of the farm or sold all the farm to pay the taxes, the farm, the equipment, and the livestock is what we rely on a daily basis. That's how we make our living. And so our assets aren't liquid, they're fixed, but if you sell off our assets, then there's nothing left for us to use to make a living.
Instead, they agreed on a new farm loan. Hughes, just 14 at the time, opened her checkbook to chip in and commit to a loan that might not be paid off until she was nearly 30. It also meant no college savings.
I had a gift from my godmother that we had planned to use to pay for college, along with other 4-H winnings and birthday money that I had saved up. And that was the first and largest check I've ever wrote in my life. And I wrote it to Mom to not just pay for the estate tax, but to help pay for the loan that we used, the 15-year loan that we used to pay for the lump sum that we owed. There is no question that if it came between education and the farm was definitely going to be what came first. It was a blessing that I was able to go to college and achieve that education, but if there was no farm to come back to, there's no point in going to school, in my book.
This family's story isn't an isolated case. A number of farmers found themselves with a federal estate tax bill they couldn't afford in 2005. Back then, the exemption limit was only $1.5 million. The government taxed anything above that at an incremental rate, which topped out at 47%. Over time, the exemption limit has increased. In 2021, it's $11.7 million. That higher level is only good, though, through 2025. If Congress does not act, the exemption limit will revert to $5.8 million. Some have called for an even more drastic reduction to $3.5 million. That amount would dramatically jeopardize the future of farming.
If the exemption does go back down to $3.5 million for a single person to pass on to their kids, that covers almost 75% of the farmable acres in the United States would be affected. You're looking at even part-time farmers being hit, not just full-time farmers.
American Farm Bureau supports legislation to eliminate the tax, or at least make the higher exemption permanent. Hughes said it would have made a huge difference for her family back in 2005.
It would have been a game changer for us, a huge game changer. I'm just glad that I'm not watching somebody else take care of the farm or watching houses come up on it.
17 years later, she still has no regrets with her decision to save her farm.
Yes, I'd do it again in a heartbeat if I could.